So today, me and my partner from KPMG are going to be performing a due diligence on the corporation Walmart. And to start off our due diligence, I'll be giving a brief introduction of our corporation Walmart. So the corporation Walmart, their head office is located in Bentonville, Arkansas, United States. The chairman of the board of directors is Gregory P. Bennett, and the chief executive officer and president is Doug McMillon. Timothy Flynn and Stephen J. Easterbrook may be familiar names to you in the business world, but they're also members of the board of directors of Walmart. The public accounting firm which audited the financial reports of Walmart in the years 2017, 18, and 19 were Ernst & Young Limited Liability Partnership. They concluded that the financial reports of Walmart Incorporated fairly and honestly reflected the financial position of the business as of January 31st, 2019 and 2018. They also concluded that the cash flow statements abide by the generally accepted accounting principles in the United States of America. So next I'm going to be talking about the significant accounting policies that are followed by Walmart. So for inventory, Walmart Incorporated values the inventory at the lower of cost or market value, and they also abide by the LIFO method for their U.S. inventory. So the LIFO method entails that the last inventory that was purchased is also the first inventory that is sold. Impairment of assets. So long-term assets are usually recorded at their initial cost, and long-term assets are then evaluated for impairment when certain business events would suggest that the amounts in these accounts may not be entirely recoverable. Property, equipment, and depreciation. So for property and equipment, they're initially written down in the books at their cost value. However, when the value of a certain equipment or property rises, it's written down as a capital gain. At the same time, if the useful life of the equipment or property has deteriorated, it's usually incurred as an expense. And for depreciation, what Walmart decides to use is a straight line depreciation method. And for business combinations, goodwill, and acquired intangible assets, Walmart Incorporated uses the acquisition method of accounting for all their business combinations. So the acquisition method of accounting ensures that all assets that have been acquired and assumed liabilities must be recorded at their fair values of the dates they were acquired. So if they acquire a certain asset, they will be written down at the market value on that date that they acquired the asset. And the income method is typically used to value intangible assets that are acquired during business combinations. Goodwill and other intangible assets that have indefinite lives are usually evaluated for impairment annually or when certain business events result in significant changes in certain asset accounts. From the beginning of this.
Company profile. Brief history. In 1994, Walmart was a vision made by an individual named Sam Walton. Sam Walton wanted a place that offered great price value and great customer service. It was originally inspired by a store called Walton's 5 and 10. Walton opened the first Walmart in 1962 in Rogers, Arkansas. As time continued to go by, the company grew, and around 30 years, Walmart acquired 122 local stores in Canada, and Walmart Canada was made. And now Walmart Canada continues to expand with over 400 locations and 85,000 associates. Summary of corporate objectives and its mission statement. Walmart's objective is to expand the company, creating opportunities for customers to live better. They also make it their main objective to positively impact their community and everything around them, like that have mostly nonprofit organizations. A description of products sold and or services performed. So the products that are sold in Walmart are groceries, outdoor livings, patios, toys, baby supplies, women clothing, men's clothing, appliances, health, beauty, and pharmacies, sports, bikes, electronics, TVs, home, furniture, shoes, accessories, kids' clothing, jewelry, watches, video games, gifts, and holidays, pantries, households, pets, and automotive parts. And products sold in the company of Walmart, which are all listed. A service performed by Walmart is the bike repair system, and all their other services are also nonprofit services.
So now I'm going to give a brief summary of the Chief Executive Officer of Walmart's report. So Walmart Incorporated managed to increase its total revenue in the 2019 fiscal year by 3%. They also generated $27.8 billion in USD through their cash flow operations. Walmart US also managed to grow 3.6% in its comparable sales and 40% in their e-commerce sales. Walmart has also released a new app in Mexico called Cashi. And what this app basically does, that it allows customers in Mexico who do not have access to bank accounts to electronically deposit money through their mobile phones, and that way they can access their money at Walmart by simply paying with their phones. Walmart has also invested in a crowdsourced delivery platform to minimize the amount of wait time customers have to wait to acquire their merchandise. So instead of waiting for almost like a week to get in the products you ordered, you can get it within an hour of placing your order. Walmart also plans to use its acquisition of Flipkart, which it had in May 2018, to gain access to India's e-commerce business. Since this is a period of change for Walmart, the size and pace at which Walmart is changing is important for its future success. This is because Walmart plans to adapt to an environment that is always growing and changing. Walmart is also changing how it carries out its operations while at the same time managing to stay true to its purpose, vision, and values.
SWOT analysis. Walmart competes with other companies based off their retail industries, which the ability to develop, open, and operate units at the right location. They also compete with digital content distributions such as Apple, Amazon, and Google. Expansion of company. Company depends on its retail industry capital to grow the company. Even though the company has a few cons, the pros are more significant for the company to do better. And Walmart uses retail operations to exploit its options in marketing, and the firm can also use this to counteract threats to the retail industry. To do this, they use something called e-commerce operation. Weaknesses found through the SWOT analysis for Walmart is that they have a thin profit margin, they easily copy business model, and they have a competitive disadvantage due to the fact that companies can have a high retail industry development. Strengths found in through the SWOT analysis for Walmart is that their expansion in developed countries is really high. Their improvement in quality and quantity standards can improve, and improvements in human resources can help them develop a labor marketing. And some threats that can be very harmful for Walmart in general is that the fact that their produce are not considered healthy. And because of that, companies can use that to their advantage, and they can lure the customers away from Walmart to wherever.
Go. First, we're going to be performing a horizontal analysis on the balance sheets of Walmart for January 31st, 2019. So when performing a horizontal analysis, you could see that long-term debt, which was due within 1 year, decreased by 49.8%, but at the same time, long-term debt increased by 44.8%. And a possibility as to why we see such a high percentage change is because maybe Walmart decided to pay off their current liabilities, which were due within 1 year, by acquiring and securing more loans, which is also why long-term debt increased by a significant percent as well. At the same time, goodwill increased by nearly 71%, and it's likely because Walmart acquired Flipkart, another business, in 2018, suggesting why goodwill would increase by such a drastic amount. Now we're going to be performing a horizontal analysis on the income statement of January 31st, 2019, as well as 2018. When observing the financial document, you can see that income before taxes in 2019 was 24.2% lower than income before taxes in 2018. This is likely because the value of a particular asset may have fell below its net book value, and this would have been incurred as an expense for Walmart. Because there'd be such a decrease in the value of an asset and an increase in expenses, this would cause total income to be much lower in 2019, explaining why income was 24.2% lower. At the same time, interest income rose by 42.8%. This is likely because Walmart made a long-term investment in 2018, which finally matured and started generating revenue in the 2019 fiscal year. Now we're going to quickly go back to the balance sheet to perform a vertical analysis. So if you quickly look at the balance sheet, and on the right hand side, you could see that goodwill, which made up 8.9% of the total assets in 2018, now makes up 14.2% of Walmart's asset in 2019. So like previously stated, this is because Walmart likely acquired Flipkart in 2018, which is why goodwill would make up a greater percentage of Walmart's assets in 2019 than it did in 2018. At the same time, if you look down towards liabilities, you can see that long-term debts that are due within 1 year only make up 0.9% of total liabilities and equity in 2019, while they originally made up 18.3% in 2018. This is because Walmart decided to pay off the current liabilities in 2019, reducing the amount of long-term debts they had due within that year. And at the same time, they acquired and secured longer-term debts, which is why the value of liabilities and equity increased while the value of long-term debts due within 1 year decreased, which is why its percentage of total liabilities and equity is significantly lower in 2019 than it did in 2018. When conducting a vertical analysis on the income statement, there were no major changes in the individual values of assets, liabilities, or equity items between the years of 2018 and 2019.
Okay, I'm going to be showing a ratio analysis of January 31st, 2016 and January 31st, 2018 for Walmart. And so the earnings per share ratio for January 31st, 2018 was 3.49 million, and in January 31st, 2016 was 4.56. The price earning ratio was 33.5 times of price earnings ratio in January 31st, 2018, and it was 29.4 times for the price earning ratios in January 31st, 2016. The current ratio for Walmart's in January 31st, 2018 was 0.76 million to 1, and for January 31st, 2016, it was 0.93 to 1. And so now the asset test ratio for Walmart in 2018 was 0.26 million to 1, and for 2016, it was 0.34 million to 1. The receivable turnovers for 2018 was 88.3 times, and the receivable turnover for 2016 was 85.1 times. The inventory turnover for 2018 was 8.75 times, and the inventory turnover for 2016 was 8.32 times. The debt to total assets of January 31st, 2018 was 80%, and for 2016 it was 58.1%. And interest coverage ratio was 30 times for January 31st, 2018, and it was 20.6 times in January 31st, 2016.
Over the past month, that is between May 13 to June 12, Walmart stock has shown a relatively continuous growth with no significant drops in the stock price. On May 13, the stock was valued at 101.31 USD and rose to a peak of 108.82 USD on June 12. Now we're going to be looking at a competitor's stock performance in order to make a judgment about how well Walmart is doing in its industry. So if you look at Amazon's stocks, you can see that Amazon has had rapid fluctuations in the stock prices over the past month. Its lowest stock value in the past month was 1,754, while its highest was 1,857, and its current stock price lies at 1,870. Amazon's stock price has risen by an average of 1.84% in the past month, while Walmart has increased by an average of 7.4%. So just by making a quick comparison of these percentages, you can see that Walmart is doing much better than Amazon, and that based off this, you could say that Walmart stocks have been performing well when compared to other businesses in the same industry as it.
Opinion with analysis to senior partners of the company Walmart. Is Walmart a good investment? Walmart is a good investment due to its stable stocks and large market share. Do they have a good impression on the short-term and long-term growth potential? In short-term, Walmart demonstrates many new strategies for company expansions. In long-term, Walmart shows promise in global sales increase and net earnings increase. Should Walmart extend its short-term credits? Based off the current ratios and asset test ratio, I would not extend the short-term credits. As a banker, would you loan money to Walmart? As a banker, I would loan money to the company due to its debt and total asset ratios and interest coverage analysis.